How is the consumer holding up, and where do they go when inflation is still here? With that, we go straight to the floor show. We have Regan Capital Chief Investment Officer Skyler Weinand and Fitzgerald Group President Keith Fitzgerald joining us now. Gentlemen, thank you. Keith, I want to start with you. All this optimism about a rate cut, there's a 70% chance now that the first cut is in the month of September. You buy that?
I think that's aggressive, but you know what? I'll take it. That's like going to the casino, only this time you're betting on the race after it's occurred.
I wonder how much it matters, Skyler, and I say this because everybody's talking about this, something that the CIO of BlackRock, Rick Rieder, said to Bloomberg. He said, quote, people who are in the middle to higher income are now getting a big benefit from high interest rates, and those are the people that spend on services, as in they have disposable income, and that income is chasing services. So he says that a rate cut would tame inflation. Do you buy that?
No, that made no sense to me. If those folks are saving currently, they are in high interest rate CDs, bank accounts, money market funds. If you raise rates, it's going to encourage them to save more. And if you lower rates, it's going to encourage them to spend more. That's the reason. That's why that interest rate marker is there, is to push people to save or push people to spend.
Yeah. Walmart was the star of this week. Their earnings report was just spectacular. They're attracting, because of their low prices, the lower income consumer, but also the higher income folks, too. Keith, we hear from next week. We've got Target, we have TJX, we have BJ's. Do you think they will do okay, or do you think there'll be a new set of troubles that we'll see as the consumer is still battling high prices?
You know, honestly, Lauren, that's a really tough call. It's a sharp question, because even within the retail sector, not all of these stores are the same. You know, Walmart has a very different consumer profile, a very different managerial approach, a very different shopping demographic. So I think we've seen the information we want to see out of Walmart. The question is, what gremlins are in the closet when the rest of the retail environment shows up?
Yeah. Same question to you, Skyler. I mean, is the consumer holding up, or it depends on which retailer, which company you're looking at?
Broadly speaking, the consumer's doing great.
Okay.
We have $40 trillion in wealth creation since 2020. But most of that wealth creation is coming from the stock market and U.S. real estate, about $20 trillion apiece. So broadly speaking, we're in a really, really good spot. But it's very bifurcated. So the wealthy folks that are in a home, that are invested in the stock market, they are flush with cash. You know, they're flying first class versus economy. But those folks that aren't invested in the stock market and may not be homeowners or renters, they're not doing that great. And inflation is really stinging their paycheck.
Yeah, when you look at it, Keith, most people are pretty sour on the economy and the prospects for the economy. Yet we're talking about Dow 40,000. We hit it. Can we close there? It's entirely possible. How do you, circle the square?
Oh, boy, again, this is something we do every single day. You want to focus on the companies that are going to be there, the companies that are capable of pulling us into the future that's coming rushing towards us, not stuff that's in the rearview mirror. So that involves a change in thinking. It involves taking a deep breath. It involves not trying to guess the unguessable. So to me, tech is still where you want to be. You want to look at how that's going to trickle into other areas of our economy. This is consistent with other great transitions in human history: electricity, steam, penicillin. Anytime we've seen this kind of flush change in humanity, we've seen the economic shift as well. So I think we're living through that right now, which is why so many people are struggling with it.
Yeah. And I'd be remiss, Skyler, if I didn't get in the meme stock mania. I mean, I'm prepared to say it's over. It came up again for the first time in 3 years. On Monday and Tuesday, you had these huge gains, and then it's fizzled since. If you look at GameStop, just to give you perspective on the volatility. 1 week ago, shares were $17. A few days ago, they hit a high of nearly $65, and now they're around $20. Skyler, is it good news that this meme mania has died down? Is that more rational for investors? Go ahead.
I think it's good news generally that folks can focus again on fundamentals and value, so to speak. But I don't think it's bad news that there's liquidity, that there's zero-day options, that you can trade Bitcoin any second of the day. And I'm not sure if it's good or bad, really, if we move towards that. But that's really what the market is showing is that there is still a lot of money to be spent, whether it's from home equity, whether it's consumer balance sheets, corporate balance sheets, that there is $6 trillion sitting on the sidelines in money markets. So that $1 trillion that might move away, that might move a GameStop or AMC, I think that keeps the short sellers kind of in the closet. And I think it points to folks really looking at, hey, look, we're going to be pretty good for the next couple of years. The economy's great. Yeah. Folks have money to spend generally. And so I think you can be long and look for good stock gains for the next couple of years.
Yeah, and it's just exciting, too. Skyler Weinand, Keith Fitzgerald, thank you so much for the time.
Thank you.
Thank you.
Right, let's take a look.